Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, October 18th at about 2:30 p.m. Eastern. Well, the S&P 500 and the tech-heavy NASDAQ edged higher today, driven by gains in technology stocks, while Netflix climbed after beating subscriber growth estimates. Shares of Netflix jumped about 10% to a record high after the streaming giant topped Wall Street estimates for subscriber additions and said it expected growth through the end of the new year. So that's always good guidance. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Excuse me, now when I captured this chart today, the SPY was climbing slightly higher, and you can see this week it's kind of sidestepping but trying to edge a little higher in the past 5 days. And right now it's trading at $584.89. That's about 58.48 on the S&P 500 itself, trading just a few cents higher than the all-time closing high, which was actually just 3 days ago, October 14th at $584.32. Now that was a closing high, so that's important. We're trading above that right now. And now if we look back here, we can get an idea, just a real quick look at a little longer term idea of what's going on. If we look at the April lows, from its April lows right here at about 494, the SPY climbed all the way up. It jumped up over the red line, the 20-day moving average, the green line, the 50-day moving average. It jumped up 14% right here to its July highs, and that came in at about 565. So it climbed 14% from here to there, and that's on top of what it already did this past year. From there, it dropped down. Then we had a rude awakening here. The SPY rolled over pretty darn dramatically. It came down to gap down on August 2nd, gap down again on August 5th, to open at $511.64. So it gave a little of that run back, but then courageously, give it credit, turned around and rallied impressively right back up here to 565, right back up pretty close to July highs. And then consolidated for the rest of August here at 564 to 565. And of course, that was pretty near the July, at that time, all-time highs. Then on September 3rd, it rolled over, September 3rd, it rolled over quickly. It fell below the 20-day, the 50-day again, and then bounced higher and gradually stepped up to this September high, then right at about 574, came down a little bit to the 20-day moving average, and again rose up to where we are now, basically this week, making new all-time closing highs. Right now, again, we're at $584.89. Now we have the 20-day moving average coming in now at 574.71. I like to round these off if I'm going to keep them in my head, so I'm going to call that 575. We have the 50-day coming in here at $562.87. Call it 563 if you want to. And we have the 200-day moving average coming down here at 529.27. So I'm going to call it 529. What we can do here, we say, well, that's all well and good, but what does it even mean? So what I'm going to do here is draw, if I can, a straight trend line below these pivots, because these trend lines are important too. So basically say this trend line where we connected the down here, the August low, that one on August 5th, down here to the September lows, and draw this trend line. See, it's keeping on going, and then of course we can draw this line across here. But now I want to draw one that's getting a little closer to where we want to go here. So I can start it kind of where I want, as long as it's pretty good, but well, darn it. Anyway, yeah, so it's coming up into here. What I'm trying to make this point is we're getting a triangle here. Now, if we drew it straight across, we could say it broke out, which it did. Absolutely right. But now we're getting this kind of rising triangle here. Now, we know that price does usually when we're in a triangle formation, and we like it to break out about 2/3 of the way into the triangle. But what we've got here is it keeps on narrowing. Give the S&P credit, it keeps on making higher highs, higher all-time highs. Wondering here, though, what we've got looking into this coming next 3 weeks or so is we have the situation in the Middle East, not too great. We have, of course, the election, which is causing which may cause a little more volatility in the market as people settle out what they want to do. So what I'm also looking at here is I'm watching the SPY climb up the red line, the 20-day moving average. Of course, it did that back here in April and walked up the 20-day. Then it fell down pretty dramatically, but it moved back up. So what we can say here is that we do have resistance right where we are. We have potential support at the 20-day at, call it 575. We have, of course, potential support at the 50-day at 563. So that potential support there is important, especially the 50-day moving average. It's getting pretty close to the 20-day now. It's like if you're walking up a staircase, pretend the 20-day and 50-day moving average, pretend it's a staircase. We'll use the 20-day for that right now. The price can only keep climbing for so long. At some point, traders take profits. You know that. You do it, I do it. So the closer and closer it gets to the 20-day, without being, say you're walking up the stair steps here. If you're walking up like price is up the 20-day, you can lift your leg so high, but it's got to go back down to the step. You take another step. You can lift your other leg only so high. It's got to go back down to the step. You take a few steps more, you get toward the top, what ends up being the top of the staircase. Your legs get tired, and at some point, you have to stop. And price is kind of like that. If we look left again, back down to April, we see price climbed ever so strongly up that 20-day. At some point, it got tired for whatever reason, price came down. So I'm kind of watching this. I'm watching volume come in a tiny bit lower. Just wondering here, I might lighten up a little bit here as we move into the next couple of weeks of earnings season. Bullish wise, we want the SPY definitely to stay above the 20-day, but more definitely above the 50-day moving average, again coming in here at 563. So again, we've got more earnings coming out in the coming week. We'll see more financials announcing, also industrials. So stay tuned and just maybe firm up your protective stops. I know we're in a bull market, I get that, but maybe just think about doing that. Our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this we call the cubes many times. This follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. The NASDAQ 100 is home to big momentum stocks like NVIDIA, Meta, Apple, Alphabet, that group. Now, when I captured this chart today, the cubes were trading at $495.27, trading nicely above the 20-day moving average, the red line, which is coming in at 488.34. We'll just call it 488. The 50-day moving average coming in at 477.18. I'll just make a note at 477, and of course above the 200-day moving average coming in at $454.11. Now, if we look again quickly, at the April low here, like we did the SPY, so look left on the chart with me. If you look at the April low here for the Qs, it came in at about 413. And from there, it rallied beautifully and even more steeply than the SPY did. It ran up really, really well up to the July all-time closing high up here at $502.96, so 503. But when you get a run up that is this steep, steeper than a 45-degree angle, usually at some point, as I said, the legs are going to get tired of those steps, and you got to take a rest here. So, and tech stocks tend to be more volatile. So the Qs rolled over pretty hard here after that July high, and did a dumpster dive down here finally on August 5th. Actually moved down below the 200-day moving average on that day, but rebounded pretty nicely in the following 3 weeks back through the moving averages, made an August high up here at 485.54, rolled over to a low here of 448, rallied back above the moving averages to the August high, back up here to about 488, rolled over again, excuse me, I just said this. I'm looking at too many things here, to a low of 448, then back up above the August high to the September high, recent high at $493.70, then back down to the 20-day moving average, and stepped up to where we are now again at $495.27. So what I would do here also, we can draw a trend line from this low up. I'm not drawing this straight enough, am I? Whoop. Anyway, it basically comes in where the 20-day moving average is. Then we can move up. Well, not my day for drawing trend lines, is it? There. So again, we have a triangle forming here. Price is getting, think of it being in a pressure cooker. Price is getting squished and squished and squished by the heat and the pressure. And usually when this happens, it either breaks up to the outside or down to the downside. We don't know which way it's going to go. And again, we're in the middle of earnings season. We have potential price resistance here at 499. Of course, then we're back up here to about the 503 highs. We have some potential support at the moving averages here. Thing is are the legs of the cubes wearing out? It keeps kind of making, the steps are higher, but they're getting a little more tired. The lows aren't popping up as high as they were. So that's why I'm asking traders to be careful here. We do have support at the moving averages, again at the 20-day at 488, again at the 50-day at 477. 50 days always important. And of course we have the September low at 448. We have the 200-day coming in at 454. So we have potential support here. As we wade through the third quarter earnings season technology, the tech earnings, which will start up probably in a week or so, and into the fourth quarter, we certainly, again, just like the SPY, we'd like it for the Qs to stay above the 50-day moving average. And again, that's coming in at 477. So just be careful here again, and make sure your protective stops are in place. Our final chart today is a daily chart of the Global X Silver Miners ETF, the SIL. The SIL, we haven't looked at this in a long time. The SIL has 34 holdings. Some of the top holdings are Wheaton Precious Metals, Pan American Silver, Core Mining, Hecla Mining. And what I did when I looked at this chart and then decided I wanted to investigate it more, as I always do for these particular charts, I look at a longer term chart. So I looked at a monthly chart. It was really interesting. The long-term monthly chart shows an all-time high for the SIL in April of 2011 at $94.02. Now, from there, it rallied and fell, gradually headed lower in January of 2016 to, guess what, $14.94. So traders had lost faith in SIL after that 2011 all-time high. However, that 1494 so far has been its low, its all-time low, and from there it flew up in 2016 to a high at $54.34. From then on to where we are now, it basically traded between $22 and $54. So you can see there was a lot going on. Now, if we look at today's chart, today is a daily chart. I know that it's a little, I squished in more months on this chart than I usually do. I think there's about 8, almost 9 months on this chart worth of price, but I wanted you to see what it's been doing so you could see it pretty clearly. You'd have a better idea. So today, this daily chart we're looking at today, I want you to look left with me back to the February low. Look left on to the left side of the chart. The February low came in, and 20 to 22 has actually been pretty good support through the years for the SIL. If you look with me, you look back at the February low here was $22.58. Now from there, the SIL moved up over the 50-day, the 200-day, the 20-day, moved up all of the moving averages. And again, the SIL, like many of these days, is walking up the 20-day moving average. It actually started higher up to the April high of right up here to $33.47. Pulled back a little bit into the 32 zone, went sideways, then made a higher high up here in May at 36. Then it came back down to retest down here, back down in the 32 arena, then back up to retest the high again in July, back down to 30 down here, and up to 38 in September, back up to here, 38, so we're making a higher high here, and back down into like 34 to 35, 6 zone, and then today broke out. So what I'm looking at here is we can almost say it's trading in a range. Now actually we have these lows here, we have these lows here, although this is a higher low right here, which we like. So we can say that the SIL has been kind of trading in a range here and then broke out today. Now, one of the reason I'm looking at this, you know me, I don't love trading during earnings season, especially this particular time we're in. So what I'm looking at here is, I mean, the silver miners, think of it, they're producing a commodity. I kind of tend to edge over toward commodities when we're in earnings season, but this is kind of a good one, I think, because the use of silver in global connectivity in electrical, semiconductor, and other electronic applications is supposed to continue to grow. So this is not like you're buying gold. This is for that and different reasons, because it is used in industry, and it looks like that use will be growing. So anyway, that's why I'm keeping an eye on this. It definitely broke out today. Now, if you say, Toni, this looks overbought to me, I'm not going to, in the short term, I'm not arguing that point at all. And would I like it to pull back before I buy it? Yes, I would. Am I willing to wait? Well, what I'm going to do is this. If in the coming week, if the SIL can stay above its 20-day moving average, which is coming in right now at $36.17, I'm going to add a small position of the SIL to my trading portfolio with a stop below the 20-day moving average, and I'm going to put it at 35.50. I get that that's over 10%, but I'm going to do that. Just a few shares. I'm just going to kind of watch it. At some point, if this moves up, it is going to pull back, and we can watch that. But I'm just going to put in my first stop down here at 35.50 and not buy very much. I just want to watch it. If and when the SIL can rise above, and it will be $40.50, and that resistance comes in from a high back in 2022. It hasn't been that high since 2022. So if and when the SIL, can rise above $40.50, I will add it more to my position, and my stop will be then, of course, a tighter trailing stop. So you may want to keep an eye on the SIL in the coming week. And now, check out this news from ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to swing trade successfully, one of our most popular products. How to swing trade successfully is a 3-part program in which you're going to discover my swing trade sleeping tiger setup that I use today to trade swing trades, now swing trade usually lasts from 3 to 7 days. So what you're looking for here is maybe you're looking for this kind of action here, a sideways action in a stock on a daily chart. Then you're looking for it to break out and go like that and like that. And for a swing trade, what you're capturing is the center out of the Oreo. That's what I like to do, and my sleeping tiger setup tells you how to do just that. The center out of the Oreo. So you're in when price is moving higher on an uptrend. You're out when it's starting to move lower. So usually these trades last from about 3 to 7 days. You'll learn how to trade them successfully. You'll also discover where to find the stocks poised to rally, when to enter, and the best time to grab profits. Our newly discounted price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. From our ever-popular 7 steps to successful trading, to what we just talked about, how to swing trade successfully, trade the trend to profits, how to read charts, great for novices, 3 winning setups, again, great for short-term traders, and how to bottom fish like a pro. You will find out how these timeless online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check these programs out by going to the link on the screen right here, or easier still, just click on the orange button below. Until next week, be careful out there. Get green on your screen. I'm Toni Turner, and this is The Market Now.